Let's bring in Stephanie Link of Hightower Advisors, Eric Johnston of Cantor Fitzgerald. Stephanie is a CNBC contributor. It's good to see both of you. Eric, I'll go to you first because you're still super negative. And I'm wondering what still prevents you from being positive even incrementally, because you seem to be doubling down every time you come on.
Yeah, there's not a lot to be positive about. We would disagree with this newfound view that the chances of a soft landing, no landing, or the chances of a recession going down, we would disagree with that view completely. I think if you look at all of the coincident indicators, payrolls being one of them and the current strength of the consumer, they're doing great, right? Labor market remains, somewhat tight, but that's not a forward-looking indicator. If you look at the forward-looking indicators and you look at things like the fact that we're at 3.4% unemployment rate, which is by definition the top of the cycle. There's a delayed reaction to Fed hikes to some degree, whether it's 6 months or 2 years. The leading economic indicators negative for 10 months in a row. Consumer excess savings, they still have, but it's going down by the day and will likely be zero by the middle of the year. Credit usage is surging. All of that, I can go on. All of the leading indicators suggest that the economy is going to decline throughout this year and will likely go into some sort of recession, but for sure will be in decline. And if you look at prior to all prior recessions, people were calling for soft landing and payrolls were very strong. And we see that changing. And what makes our conviction so high is that valuations, and this was touched on earlier, valuations right now are excessive. The equity risk premium is 1.5%. To put that in perspective, the average over the last 10 and 20 years is 3.2%. If we were to go to 3.2%, that would be 3,100 in the S&P 500. So valuations are excessive and earnings estimates are still too high.
All right, Steph, you can debate with the best of them, so have at it, because Eric's view is so different from yours, it's striking.
Well, yeah, so I agree that payrolls are a lagging indicator, but initial claims are a leading indicator. And you are now, again, another week of sub 200,000 in initial claims. And you're down on the 4-week moving average about 6% year over year. So labor market's still very tight. Wages are still strong. Even though they're coming down a little bit, they're still strong. So real incomes are actually going up for the consumer. And I would just simply point out that the consumer, it's not all gloom and doom.
What is going on, YouTube? It is Brendan from Market Makers, the Aloha Trader. Guys, I had a lot of fun making that podcast with Crypto Savvy. It's the video before this video. If you didn't get a chance to watch it, it'll be linked at the end of this video. We have a lot to talk about. That clip you just saw was my man, Eric Johnston, the human head of hair, debating with Stephanie Hightower. Is this your bearish and bullish argument? As you guys know, I follow Eric closely. His TA, or his macro market view, I should say, is closely aligned to mine. He is getting more and more bearish, doubling down, as the host said, as am I. Guys, this is the same bubble cycle we had in .com. And because I can say that because we have the pattern. So don't fall for the thirst trap, boys. Do not fall for the thirst trap. You have Stephanie giving you the bullish argument based on lagging indicators, and I just don't think it'll get that bad. Well, it's going to get very bad. Unemployment is always at peak before it breaks apart and rips the market apart, okay? We are at a 50-year low in unemployment in a declining macroeconomic space. The thing is, it just takes time. So we know the market can rally. We're going to trade the rallies when we have a good, strong rally to trade, which is the next level down. But right now, we're waiting to see where this pump wants to die on all of the indices, where Bitcoin's going to be, so we can put our shorts on and ride this down. Okay, we have a big week coming up. We have Powell talk in front of Congress. I don't think he'll drop any any verbal bombs there. I think he's going to be, oh, we're Fed's committed to fighting inflation. The same thing he's been saying over and over again. And then we have the jobs report at the end of this week on Friday. Now that's going to be key because if that comes in super hot again, lots of people are worried about the Fed putting 50 basis points back on the table when the market's expecting 25. I mean, once again, the Fed messed up. The Fed shifted down, right? They went from 75 to 50, then to 25, and then PCE picked up. Inflation picked up. The CPI barely came down just from 6.5 to 6.4. I'm telling you, if the inflation sticks around 6.4 or goes up to 6.5 or 6.6, I mean, that's your trigger March 14th for a sell-off. But if it comes down 1/10 of a point again to like say 6.3, I think you're going to see some type of rally. So we're going to talk about this, guys. Got a lot to go over in these charts. Going to look at the equities, going to look at the VIX, going to look at Bitcoin. And if we have time, we'll get into the metals as well. This video is going to be brought to you by SimpleFX. Guys, you want to trade these assets? Check out SimpleFX. SimpleFX, the premier exchange to trade worldwide equities, commodities, forex, and of course cryptos. Guys, you can trade anonymously with only an email and a VPN. With the Market Makers link, you get a double first-time deposit bonus up to $5,000 available instantly. You will love this professional platform. Check out SimpleFX. It's a fantastic exchange, guys. I hope you do check it out. It does help support this channel. You want to buy spot, you want access to all the various exotic altcoins out there, then check out our BingX link as well. And with both those links, you do get a free month on our Discord, Messagely, and the Telegram. All right, let's go ahead and get into this. So let's look at our chart. You guys have seen this a couple times now, but we're always getting new subs. Same exact .com pattern. .com on the left, modern market on the right, 9-bar 63-day rally, 16-bar 112-day rally, the pivot, the back test of the trend line, 963, 16, 112, the pivot, the back test of the trend line, and now we're pushing up on low volume. I'm going to show you this in the other charts. I mean, it's kind of uncanny, and it's kind of unreal that nobody else is talking about the exact same candlestick pattern to the count on the rallies. Now you're making your pivot, and if we come back up for a co-equal high, like we did over here in .com, that means we're coming back up to like 41, 4155, 4170, maybe 4200 to make a co-equal high. If you do the exact same move, spring equinox, of course, March 21st, Fed, of course, meeting, or March 20th, Fed, of course, meeting March 22nd. So have to look out for this move, and we could just come for a lower high. Let's go ahead and look at this on the 3-day chart, looking at our modernized market maker Dow theory for a boom bust bubble. Denial phase, we hit the 618 at 35.93, got beneath it. FOMO phase, where we are going to trade the rally, guys. 31.41. Notice Eric did say 3,100 in that video. I've had this target going all the way back to August 2022, 31.41. It's the advantage of being Fibonacci, Fibonacci as having your base case, using advanced Fibonacci techniques and patterns. Man, tongue twister. Using these types of patterns and understanding how to lay out your waves. We knew this in August, okay? And you heard him just say it, fair value for the market would be around 3,100. This is going to be a big rally because when this does top out, whether it does break out and want to go to our higher target up here, which you're looking between 44 and 786 at 42.76, this quadrant, right? That's our breakout target. Let's just say lower CPI, dovish Fed. Remember, he said disinflation 11 times in his last speech. Get a dovish Fed, that's where you're going. 42.76 to 4,400, okay? In that range, we'll pull tighter fibs if we do break out to that upside. But just to give you a ballpark, but if you just do come up for your co-equal high and you start topping out and rolling over, the market's going to move in waves. It's going to hit the denial again, but it'll come back down to the FOMO phase, and this rally could be epic. This will be another 20, 25% up move, going to try to catch the bottom bottom as best we can, find a bullish pattern, ride it to as close as you can to the top, and then we got to see what the market's doing. What's the economy doing? My personal viewpoint, it's going to get worse. Unemployment will go up. You will see the macro factors getting much more bearish. So I think this rally will fail, and we will come down to the bubble target that has been hit in every single bubble going back 100 years almost to the 1929 bubble, which is at a minimum 50%. And that brings you to 2409. That would be your September, October time period this year. So this rally, depending how long it takes, depending how sharp it is, depending, duration, euphoria in the marketplace, this could be all summer long once we decline to this rally, and then you start breaking down and falling down very, very rapidly to that September, October bottom. Got to see what happens in the market. Got to see what happens in the macro politics picture too, such as the conflict going on. Let's look at this again, this pattern of descent. If we don't break that previous high here on the pattern, which is roughly 41.95, and just come up for that lower high, there's your spring equinox in the green line. Remember our 43-day pivots? There's different ways this will play out. We've been over it a couple times now, guys, but if we come up and we keep pushing up and we do get a lower CPI and a dovish Fed, then I think this 43-day pivot out here on April 14th, that could be your top, okay? However, CPI comes in hot, or CPI comes in, with, I don't know, the same CPI perhaps, and the Fed just does quarter point, you could see your rally, maybe get your co-equal high and start breaking down. Depending how quickly you descend, April 14th could be a base, or it could be an acceleration point where you hit it and you just really break down, right? So you roll over, you go sideways, you hit it, and you just boom, start falling apart. So that's what pivot points are, guys. They are vibrational points with price and time meeting. They can be accelerants, trend reversals. You just have to watch them because, as you know, the reason that I'm paying attention to that 43-day pivot is because it's hit every single time since we've been in this Wyckoff sideways market. Pivot point here, top, pivot point here, bottom, pivot point here, high in the range, pivot point here, high in the range, and then you roll down, okay? Actually, this wasn't the high. I was very close to it, but a high in the range and then roll down. So the next pivot's out here, the spring equinox coming up very, very quickly. Looking at this on the daily, the S&P on the daily, bounced right off our 45, just got a wick below it, hit the 200, got a nice bounce up. We traded this long in the room. We posted the trade. One of our traders posted this trade, and this is nice in profit. One thing to note here, guys, look at the volume on that bar. Look at the size of the bar. It's volume spread analysis, right? It's part of Wyckoff, but the size of that volume, the size of this volume bar, well below average volume. Nice pump up. This is a volume divergent rally once again. You have to pay attention to these things. Our market makers volume ratio still in the bearish territory. Money flow did not turn up. Okay. There's not a lot of euphoria, not a lot of money flowing into this. And you can see this here. The volume just keeps getting lower and lower. So we want to see if this can keep pushing up. That next level you have to flip is 4080. Got to flip 4080. If you can flip 4080, you have the shot there of going back up to your co-equal high of 4166. Okay. And that would be your co-equal high like you did in .com, giving you this massive double top. Now, again, if you get that lower inflation, guys, you have those higher targets at 4276 up to 4400, and you need euphoria in the market to really drive it. I don't know if you'll get there. We have to watch it, but that first level you want to watch here is 4080, right around the corner. You're at 4045. Let's see what happens. But, I kind of think with the PCE being hotter, I mean, people always ask me, I'm just going to give you an opinion. I have no insight into what the CPI is. The whole thing's rigged anyways, right? So, but I have no insight to what it's going to be. PCI hotter or PCE hotter. If the jobs report comes out Friday and that's still hot, and you had a hot PCE and a super hot jobs report, twice as many jobs as expected last month. I mean, I kind of think this can get up here between 4080 and the 4166, and you might see that classic lower high giving you this larger double top, but have to see. Okay, we got it. This is a wait and see program here. Let's look at the VIX. VIX, of course, got above the 50. Look at it. tightening of this channel, and you just fell back down to 18.49. You keep bouncing off the second standard deviation. You see this? So this is roughly at about 17.4. So you could come down a little bit more, which means price can rise a little bit more. And we'll see if that happens because you start to pull back up here. So you might be getting close to a cap here once again on the S&P. Looking at the Russell on the 3-day chart, love trading the Russell. Russell on the 3-day chart, again, just looking for that classic. Here's your pump back up. This classic potential double top as either a lower high or coming up for a co-equal high. Okay, so watching this closely because, of course, you can break out to the upside just like this, and you can see your higher targets up here. I have this on the daily, I believe, but look at the volume once again, guys. The volume's horrible. Okay, at least on this ride up here, this off the October bottom, you had some, even though they were significantly lower overall volume, you can see you at least had average volume and trend on a 21-day trend, right? These volume bars are just getting smaller and smaller on these movements. Smart money, or big money as I call them, big dumb money, is going to start dumping on retail when they think the tops are in. You will see that. And of course, this was our trade setup we had on the Russell, guys. Beautiful short here, 140 handles, traded above 1988, came back down, as you can see, and now it's pumping back up. It's hung up at the 1930 level, and we're looking for it to potentially come up for that co-equal high at 1988. It may struggle to get there. You know, it's going to need help. It's going to need a low CPI and some people to get really excited. But if it does break out to the upside, you're just printing yet another pattern. And I have that reciprocal move here. This move at 2059 would be the next key level to watch. Okay, if you were able to keep coming up and you get some market euphoria. And if you're looking at this on the NASDAQ, as you can see, the NASDAQ just pumped past 12,259. You fell down, completed the reciprocal move. Excellent, right? 11,948. Anybody that was talking about, or anybody that took that short we were talking about up here, you hit the 200, bounced off the 11,948 in the reciprocal move, and started pushing up. So you want to see these levels, if you can hold these or not: 12,384, 12,542, 12,636, and then you're looking at the co-equal high situation once again. On Bitcoin, guys, the boom bust bubble, as you guys know, came down to phase 2, the FOMO minus 75%, and FOMO gave you a nice, 55-65% rally. Excellent rally. Discuss phase is next at 93%. Weekly time frame looks like you're printing a little bit of a disjointed double top here, something to watch. But let's look at this on the daily chart. As you can see, I threw on a 45 angle here, and you can see you just bounced off the 45, hit your resistance up here at 24,930. We'll look at this on a trend-based fib, and then fell back down and bounced off the 45. Now, of course, if you look at this on a trend-based fib, you could have measured this way as well, and you can see you didn't even come down for the reciprocal move. So this wasn't a strong sell-off. So when I look at it this way on a trend-based fib for resistance, you can look at it like this, and you can see you got to your 25,180, right? The area that we talked about shorting, and many people did short. And if you held it onto it for the second bounce down, congratulations. I did not, but that would be awesome if you did. So if you did, you're in great profits. And let's see if this keeps holding this 45. This is going to hold as long as the equities hold. When the equities break down, this is the levels you have to watch, guys. You break the 45, you start banging your head on here, you can roll down much faster. Looking at this on the 3-day chart again, if we don't come up and defeat that 25, whatever that high is, 25,250, this is what I see happening. You come back up for a lower high, and I'm looking at that target of 12,888. If the markets do break out with low inflation, then we can adjust this target as well. But again, everything that is going to rally, we are looking at shorting this on the rallies. I am looking at shorting this at the top of what I think is the rallies. Stay tuned to this channel. We will be discussing it, guys. All right, everybody, have a fantastic Sunday. I will see you next video.